Oh, I think there you go. Now you can see me. All right. All right. I can hear myself. So, hello, Erman. Hello, everyone. So, let's wait just a couple of minutes so whoever has to join uh, has the time to do so. But as you see from the title, we're going to talk about some strategies to use them in crypto, how to protect your portfolio. Hello, Mort. This won't be a very long. This is not going to be a full hour of live stream. I just wanted to uh, give you some content. It is always good when teachers, when content creators have some time specifically for the Sleep Money Club, and I haven't been posting, so I thought this would be a good bonus for people who are in the club. Yo, what's up, Dark Miner? So let's start with our day. Let's start with our um, live stream. So we're gonna talk about a few strategies that you can use. Of course, every time you guys see me here, I talk about selling options. Today I'm gonna talk a little bit more about buying options, how you can protect yourself or choose wisely to profit from an asset going up or an asset going down if you're buying a put, if that's something that you want to do. But yo, what's up, Docky? Welcome. But I'm also going to show you how many strategies you have, how many strategies you can deploy, you can play with here in crypto. We have some limitations. Of course, we have Dark Miner, for example. He really good options trader. He sells a lot of options. You can check him out on the options tab, the options chat. We have a lot of people who do that for traditional finances, for with stocks, and you can see that over there we have a lot of more strategies that we can use, just because brokerages accounts, they are way better than the options protocols that we have right now. Not that these options protocols suck, but they cannot execute multiple strategies at multiple legs at once for structured strategies, as we're going to see. We have some, I think last time, if I'm not mistaken, whoever was here can correct me if I'm wrong, but I showed you Atlantic straddles on Dopex. Today I'm going to show you other strategies that you can use, that you can do. So we're going to start with that. Let me just share the screen right here. There you go, this one. So this is a very good website that I found out a couple of days ago. I started using. It will be on I'll leave the link here if you're interested in. It shows you all these strategies that you can do for options, not crypto options, options in general. So we have the single, the naked call, naked puts. You have, which are just you buying a put, buying a call or buying a put. You have the spreads where you do multiple operations. Now let me click, you sell a call at a higher strike and you buy a call at a lower strike. So this creates what is called a bull spread. We have a bear put spread. You can see all of these strategies. Now we have multiple strategies with four options, excuse me. So you can see there's a lot of creativity and strategies that you can use for each and every market. The condors is when you use that when markets are see right here. This is, there you go. You use condors when markets are going to stay in a certain range. You can see right here, if the market's going to stay, let's say, inside a certain range, like 1,000 points for Bitcoin, for example, it's going to stay between 20 and 19-ish thousand dollars, then you can do a short iron condor. But now this is where I told you it was going to be a little bit tricky, because for these strategies so far, we don't have many protocols that do that that do that automatically. You would have to sell these manually. You would have to go, for example, you have to buy a put, sell a call, and buy a call. You would have to go, for example, on Lira right here. You would have to go to trade, and you would have to do this manually. You would have to select, let's say, October 14th. Ethereum, let's say, is going to stay between 1200 and 1400, and you would have to do that manually. You would buy a put, so you come right here, buy put, and you go all the way down to, let's say, 15. Yeah, this one right here, and you would buy this one. So you get what I'm saying. You would have to do this manually. The only protocol that I know does this, these strategies right here, a little bit better is Hedgic. I think it is called Hedgic Options. Let me see. Yes, this one. But Hedgic, their products are kind of like vaults. So all options plus strategies. I'm not gonna connect the wallet. Do I need to? Okay. Switch. Perfect. So you see right here how you can do multiple strategies. You cannot do iron condors, unfortunately, but you can do these spreads. Spreads make your options a little bit cheaper. So if you don't want to spend that much, you just go for a spread. But you can see it's still very limited, but Hedgic does that. Haven't tried it yet. It seems like it can work, but sometimes it just glitches like Dopex does when I showed you the straddle. This is because they have the contract has to execute all these operations, these trades simultaneously. So I've showed Dopex last time. They said they changed some things. I talked to some guys on Twitter, but I haven't tried after the merge how the protocol looks. But the other day on Discord, let me see if I can on the Sleep Money Club, someone asked me if there was stable coins if you could sell stablecoin options, and I said no, but I said with like no, but actually yes, in some sort. I cannot find who was the person that asked, but I'm gonna show you how you can do that on Lira. Basically, just because on how European options work. On Lira, if you're gonna sell a call, if you're gonna sell a put, you just use stable coins as collateral if you're gonna sell a put. But if you're gonna sell a call, usually sellers, they have to provide the underlying asset as collateral, as margin, which is common also for stock options. If you go in the stock options section, you see people selling covered calls. When they sell covered calls, they need to lock up this margin. They need to lock up these shares that they have. For Lira now, and also for Synquote is going to do that soon. I don't have the exact time, but Synquote's also going to be deploying that. For covered calls, you don't need the underlying asset. You don't need the underlying asset at all. You just need stablecoins, which means that now for selling puts and selling calls, you can do that. You can do both of those with stablecoins, which is what I've been doing for a while now. Let me see if I can show you right here. Oh, I need to switch again back to Optimism, switch networks. There you go. I have this option open right here. I sold this call. You can see I am in the profit. So everything that I'm doing now on Lira and on Synquote, because on Synquote I'm just selling puts, but everything that I do now is with stablecoins. What is the perk of running these strategies with stablecoins only? Well, it is that, for example, if Ethereum goes down to $800 again, I am not holding Ethereum in this wallet. So this wallet is not going to suffer any, it's not going to be in the red, it's still going to be green because it's going to be everything that I had in stablecoins. And it is better for me to track because I can always track it in stablecoins. I don't have to track how much is my Ethereum worth right now, how much did I get in P&L Ethereum wise, like the price at Ethereum at a certain range at a certain date, I don't have to track these prices retroactively. I can just track it with dollars, with in USD, you know. So this makes it a whole lot easier for you to track it. And 1 second, wrong. It makes it a whole lot easier for you to track it as someone that is keeping tabs on it on a weekly basis, because I do this weekly. Every Friday I just sell this option and I just carry it through the week. Sometimes I close it on Wednesday if it is going to go against me on Thursday, but otherwise I just let it expire. And this is better because I can just track it. They have this tracker right here. You can see right now this is my portfolio right now. But other than that, if you want to track it manually, which I always recommend, you just create an Excel sheet, an Excel document, and just keep tabs on a weekly basis. With stablecoins, it is better. So if you're doing everything with stablecoins, there's no impermanent loss. Pretty much, this is a stablecoin farm, you can say. You're just using the underlying asset as the speculation object. So you can speculate now with Ethereum, with Bitcoin. They just deployed the Solana vault also. I'm not going to be trading Solana here. See, now they have Solana also, but I'm not going to be putting, not going to be selling Solana calls or Solana puts. And on SyncQuote, we have 6 different assets, because if we switch to BNB chain, you also have BNB right here. But I usually stay on Polygon because I focus on these 3. Sometimes Ethereum, but Ethereum I do it on Lira. But when I'm gonna switch from Lira to SyncQuote, whenever SyncQuote adds margin, whenever SyncQuote adds the opportunity for you to do everything in stablecoins. This way, I don't need to hold any Ethereum, or in this case, S Ethereum here for Lira, because Lira uses this synthetic Ethereum, synthetic Bitcoin, synthetic dollar, everything they use is because they're built on synthetics. But here we use USDC, which I prefer a whole lot more than SUSD, to be honest. So whenever we can do this also on SyncQuote, I'm going to switch fully. I'm going to start to sell all my calls, my covered calls, cash covered calls is what I like to call them, because they're not naked calls, because you need to lock up margin, but they're not asset covered calls, you know, they're cash covered calls pretty much. So, pretty much, we were talking this morning in the options group how much was everyone's P&L for September. I did counting this wallet right here for both SyncQuote and for both Lira and SyncQuote. Also with Friction, I already showed you Friction a couple of times, and I closed all my positions on Thetanuts. I know sometimes you guys ask me about Thetanuts as well, and I used to talk a whole lot about Thetanuts. I closed all my positions. I exited out all of the vaults that they have for options. I was on Ethereum and on Avalanche on Thetanuts. I closed on all of these. But for September, I did 8.3. Let me see. Yes, I did 8.3. 8.3% yield on it. Now, I don't know how much yield nodes has done. Do I have Twitter right here? Let's see, yield nodes. But I'm pretty sure I beat, they have September already. September, they did total profit of 5.3. So I pretty much beat, which is always my goal, you know, because I have some money on yield nodes as well. I beat yield nodes with selling options. So I did 8.3. So I did 3% more, which is amazing. We on a monthly basis, when you compound that, at the end of the year, it's going to be over 100% pretty much. So I'm very happy. Everyone keeps, I know Erman, a couple of other guys keep asking me, hey, how's the course looking? How's the course going? And it is going slow, just because right now I am working extra hours because I have the course, I have the club. I've stopped YouTube for a little bit, and I'm working with SyncQuote. I joined SyncQuote as a part of their marketing guys. So I'm putting extra hours, but the course should be ready soon, where I show all of these right here, everything that I do, how I do it, practical things. I open positions, close positions here, live for you guys. And the course, of course, is going to be free for the Sleep Money Club users. I remember I was going to give Docky a login and Erman login so they can review it before you guys view it. So everything needs to be perfect when it reaches your hands, when it reaches your computer, so you can click the link and just enjoy. So I've been working on that. I had to redo a couple of videos just because it wasn't the quality that I wanted it to be. So almost ready. Just give me just a little bit. And I think this was it. I didn't want to make it very, very long. Oh, yeah. And as I said, I am working with SyncQuote now. And we have an announcement, which is now we have a trading competition. Let me just show it right here. Yes, so the trading competition will be announced today or tomorrow morning on Twitter. So if you want to give it a go on options trading, if you want to give it a go on crypto options, and you want to join for an opportunity to win $15,000, not 15,000 Matic, not $15,000, you can just join. We will be talking about it in Discord today. We're gonna release in a little bit the Medium article explaining the rules of everything. Of course, unfortunately, I'm not gonna be able to participate because I'm gonna be part of the team. It's not gonna be fair if we join, but give it a go, because we are gonna be splitting, and it's gonna be three different categories. It's gonna be quantitative side, so whoever makes the most in US dollars, they get the premium, they get a price, and then it's gonna be top three. And then we have a top three for absolute P&L, so a relative P&L. Whoever makes the most percentage wise is also going to qualify. The top three is going to win a big prize. And we have a lottery system, so whoever does not qualify for any of these previous two, but they're still participated into the competition itself, they can qualify and they can win. I think it was 1,000 Matic, so 1,000 Matic from just for participating, that you can win. You're going to be part of this lottery, so make sure to check it out. It's gonna be, as you saw right here, from October 10th all the way to the last day of October, all the way to Halloween. So I wish I could participate, because I like these. I participated on Liras for the merge. I didn't win, unfortunately, but it was fun. So if it's something that you guys want to give it a go, there's just a small. The minimum is $50 traded, so you can do 5 different trades of $10 and you can qualify. But yeah, I think this is it for buying options. Pretty much, what coin do you need? You can just go right here on Polygon. As long as you are on the Polygon mainnet, you can trade whatever coins. So you can trade Ethereum, Bitcoin, Link, AVAX, and Matic, and with these you're qualified. As long as it is in between these time frames, it's going to be from 8 a.m. UTC all the way to 8 a.m. of the 31st. If you are inside that range, whatever trades that you do, you qualify for the competition already. All the details are going to be available tonight. I already wrote the article itself. Everything is going to be ready by tonight. I'm just waiting to post to public the Twitter itself. And yeah, I just didn't want to plug it like just right at the beginning, but this is a good opportunity to make some money, I think. Just understanding and learning, playing a little bit with options. For buying options, I tried. I'm not very active, an active buyer. I'm more of a seller, as I said before. But we've made also here on SyncQuote, we've made a couple. I personally wrote these. I made a couple of threads talking about the Greeks. So we have Delta, Gamma, Vega, theta, and rho. All of these are here, and it kind of gives you a little bit of how knowledge on how these options work. You know how these Greeks work and how they affect the option itself. Especially if you want to buy options, you should focus on understanding how Vega works, because you can get that IV crush if you probably already heard about IV crush. So you need to know when to sell that, when to sell Vega, when to sell an option, when to buy an option. For this I can show you. This I can show you right now. For the course, I've created a little cheat sheet that you can take a look at. For example, selling options. So when do you sell an option? See when to sell options. And this one is going to be available for you to download during the course. So we have right here pros and cons of each strategy. I also have it for you to buy options. When do you buy options? When do you buy calls? When do you buy puts? All of this is going to be included. I'll be explaining it in detail in the course itself. Will sync quote be available for the US? The thing is, they put that limit, the geolock, because of regulations. So I think we are waiting on a lawyer to tell, hey, they're not going to be regulating, just because they put this geoblock right after the tornado cash thing that happened, that everyone was scared that they're going to lock up the government was going to lock up their USDC that had anything to do with tornado cash was going to be sanctioned, and all these things that were happening. So the geoblock was put on because of that. I don't know when it's going to be released, if it is going to be released, but personally I'd say go for a VPN if that's something that you want to do. I use VPNs. I would use VPN if I was in the United States, just because I want liberty to go whatever I want, online. So this is what I would do. But I don't have an answer to that if it's going to be available in the US anytime soon. The founders are all the developers that work on SyncQuote. I'm the only one remote, but everyone works on US territory. So they pretty much have to use VPNs if they want to use the protocol itself. But I think this is more precaution than anything. Just because crypto right now is being sanctioned, regulated, people don't know how is it going to go. If it is going to be government, the government's not going to like it, or the government is going to like it and it's going to approve. So we are in this bad situation. We know now. Actually, the US people, US users. I personally don't have anything against using a VPN. Some people do. Some people I think it is even safer. You're just protecting your data, your IP address, everything. But yeah, I think it is a personal choice if someone wants to use a VPN to go past this geoblock or not. But let's see if I have anything more to say. If you have any questions, I showed you here. I showed you the sync quote. But yeah, on SyncQuote, I don't know if I showed you this last time. I don't think I did. But we have an Earn Yield tab right now that once you click, it shows you a little bit, it shows you in a simpler way which option, which strike to sell and what is the probability of it going in your favor. So for example, Ethereum, I personally stick with Ethereum, or let's say Matic. You go to Matic for October 7th. There's only one strategy right now. Let's change it. Let's see Ethereum. Okay, Ethereum, it gives us three different strikes. It gives a 1400 strike, 1450, and a 1500 strike. This is for October 7th, so this Friday. And it gives you the chance of profit. How does it calculate this chance of profit? Excuse me. It calculates it with the delta and the Vega and the theta, pretty much. The theta goes in the favor of the seller. So you're selling, you want a high theta, you want to sell at high volatility. The volatility is at 70, so you have a medium-ish volatility for Ethereum. I think for Ethereum it's better to have over 100% volatility if you want to sell, or everything higher than that is good to sell. And Vega affects this, meaning that if this volatility changes by 1, so if it goes to 71, Vega will affect this price right here. Vega will eat this premium by 40 cents. And the same goes with Delta. If this changes by, not this, if the price of Ethereum changes, Delta will affect the price of the option itself. So this is how it is giving you this number right here, the 83%. So if you want to go extra safe, you click right here, a 96, very low Delta, 0.5, very low Vega, 0.14. And I think Vega is not really that used, or people don't give that much attention to it when it comes to stock options. I don't see people talking about Vega that much. People talk a lot about Theta. We have Theta Gang. If you follow the Wall Street Bets guys, they always trade with Theta. If you had to trade this one Ethereum, which one would you choose? Well, let's take a look at the charts so I can tell you. Ethereum right now is at 1324. So I think I already showed you this. These lines right here are the strikes where I sell my options. So I already sold an Ethereum option and I sold it at 1450. So I personally sold a 1450 call. So here we have a 1450. Yeah, we have a 1450 and it's giving me a 91% chance, which is a medium risk. When I opened this right here, it was right here. So Ethereum was at 1331. So it was higher than it was right now. And I opened this position. So I opened this position. The delta was, I think, 16-ish, 0.16 delta, 0.17 delta, something like that. And it got all the way down right here to 1273 yesterday for me, yesterday night. And it still has, let me trace it. Okay, we still have 9.57% on the upside that it needs to go against me, and 3 days and 12 hours. So I think this is good. I think this is a safe bet for someone who's starting right now. Of course, the first couple of times that I'm selling this, I will go for low risk. You can see the difference in premium is like almost 3x difference, one from the other. But if you're just starting, it's better to collect a smaller premium than a bigger one and then suffer, and you don't understand what is going on, you don't understand what the risks you're taking. So I think this is the better solution if you're starting. I personally, I did this one. You can see the delta right now is at 10.11, which is relatively safe. This is why it's giving you the 91%, and this one has a delta of 23. So never go to this high of a delta if you don't know what it means, if you don't know why the implied volatility, what does it do. If you don't know anything, if you're just starting right now, basically I just go with low risk. So you see a percentage is a very high percentage that is going to go in your favor. You're going to make some money out of it. It is better than you did this, than you did not do anything. So you have an incentive for you to selling these options. So I think it is worth your time for you to do this. And then once you start to understand, you do get some lessons, you understand how Greeks work a little bit, you understand how to speculate by looking at a chart. I think it's going to go over there. I think it's going to stay under that. Once you are able to make your own decisions instead of copying someone else's, then you just go right there and, hey, I think I'm going to go medium risk this time. Then you go medium risk, and yeah, I understood why it did what it did. I understood why the market moved the way it did. I understood why the pricing of the option was the way that it was, and I'm happy. So you can start doing other things. Then you can start doing more sophisticated strategies. You can sell a put and sell. You can do a manual straddle if you want to. If you go right here, a straddle. Yeah, you can do a manual straddle. You just buy a call and you put at the same strike and expiration, and if it goes in either direction, you're profiting. So this is the long straddle that I was talking to you guys before the merge. I think whoever did this, they made a lot of money because the merge happened and nothing happened pretty much. I think it was the 15th, so I think the merge was right here and nothing happened, but then boom, it went down. You can see right here, it went all the way to 1200. So whoever sold a straddle right here, they profited from all the way down. And if it was going to go up, they profited on the way up. So you can see why the straddle is a good strategy to use if you don't know how the market's going to move, but you know it will move. But of course, for the straddle, you need to have a low volatility, implied volatility. So on this case, I have never seen personally an implied volatility lower than 60 for Ethereum. You can let's check right now. So we have 100, 180, 86, blah, blah, blah. Let's see right here. 100, 90, 80, 70. See how the volatility is it gets so much higher. So if you see a volatility of 60, of maybe 70, and you know it's going to move, it's going to go up in volatility, meaning that the market's going to react badly to one side, maybe it's going to spike up or spike down, then you can make a straddle play. Or if you know exactly where it's going to go, hey, it's going to go up, I know for sure, then you do that. I thought it was going to go up after the merge. I even bought this portfolio, this one. I even bought a long call expiring this month, and I bought it all the way back in August. So I've been holding this, and it's going to go down, but of course I put just a little bit of money into it just to play with, because they just released leaps, long options. But yeah, you can see this one right here. When I bought in, the implied volatility was very low, not recommended, but you know, and now the delta is 14. And also another thing that you can do, you can play with these if they have differences in prices. For example, if you go on trade, if you want to sell a call, if you want to sell a put, for example, if you want to sell a put, let's say you want to sell this right here, the 1150. So you're going to get $18.05. Let's see on SyncQuote. What day did I put? October 14th. We have, yeah, 1150. Sell, put. 18.98. So you see the difference in price right here. There's a 90 cents difference. Now, this is not much, but if you go to the straddle.xyz, I think this is the website. Right here, if you click on arbitrage deals, you are able to see every arbitrage opportunity that you can do from Lira, but this is from Lira to Deribit. Deribit is hard to use, so I don't recommend if you don't know what you're doing. But you can see, for example, on they have an arbitrage opportunity right now at a 21% discount, 3.43% difference. So you can see on one side the same call, so same thing, same expiration, same strike call. On Deribit is at 12.57, and on Lira is at $16. So you can see what is the difference. So how do you make money out of this? How do you make money? This is a delta neutral strategy. You don't lose with this strategy pretty much. So, but you need to have collateral, because you're gonna sell in one place and buy in another place. This is also a good strategy for bear markets, also to arbitrage options. It is tedious. It is a little bit of a hard job that you have to keep up with, but it gives you delta neutral strategy, so you don't lose in any side of the market. So you go on Lira and you sell this call right here. So you're gonna sell the $1,400 October 7th call. You're going to collect $16, and then you're going to buy it back on Deribit for $12.57. You're going to make a $3 difference. This is yours to keep. Since you opened and closed the position, you're neutral, because you opened in one side and you closed it. When you do this, you don't have any risk. You're not risking anything, because on one side you're going to profit, and in the other side you already closed the position. It's like when you open a put, and then it's like when you open a call right here. Right, let's say you go and you buy a call. Boom, you bought a call. Once you buy this call and then you close it, you're out of the position, if you made money or not. But right here, you're doing that on one place and closing it on the other and keeping the profits. So you close your position and you still kept this difference right at the bat. So this is a good strategy for you to do. This website, we're seeing if they want to work with us to include SyncQuote. This way you can do everything on chain, because Deribit is not on chain. They use crypto, but they're not on chain. You have to send that just like you do for yield nodes pretty much. You have to send that to their wallet and trade it from their wallet. So if they add Lira right here, you're going to be able to see these prices also on Lira, so you can also on SyncQuote. This way, if there is a difference between Lira and SyncQuote, you're going to be able to trade over there and make money. It's just change your wallet pretty much. Is there a minimum or max amount that you can use? Well, if you're doing this strategy right here for the arbitrage, you're limited. You have a minimum amount, which is the selling one. So if you're selling one call, you need to have this collateral, which is 1,400. So if you're selling, let's say, if you only have $100 in, let's say if you have $500 to do this, you don't have $1,400. You have X amount, 500. You can do that with 500. You just have to scale it down. So instead of selling one contract and using 1,400 as collateral, you sell whatever that is to 500. So 0.35 of a contract, because you can do fraction contracts. You can do right here and sell a fraction. So you can do 0.5. See, and you're gonna sell half of this contract. So if you only have $500, you see how much that is in contract size, and you can do that. And instead of collecting 16, you're gonna collect the proportion to the 500 that you put in collateral. But that pretty much expires once the option expires itself. So this is all the way to October 7th. Once you get to October 7th, you just pretty much rinse and repeat, find another opportunity, and do that again. Just by doing this, so no risk taken. If you do this, that's 26% APY. So this is twice as much as, not twice as much. This is a little bit, yeah, because Anchor was paying 20%. So this is over that 20% that Anchor was paying, but with a legit and sustainable way. Yeah, you can do fractions. I think the minimum on SyncQuote that you can do is 0.1. Let's say if I want to sell, what is the minimum? 0.1. I need to switch to Polygon 1 second. Connect wallet. Let's see. 0.1 or 0.01. Okay, you can do 0.01. So 0.01, you would need $11 in collateral. See? So this is how much you can go minimum. If you have $10, $15, $50, whatever. So this is a good tool. There's other tools right here for arbitraging, but this is the best one that we found out that works great. The time has a little delay, so I think it is 5 minutes delay between prices. So make sure when you check, see, it just changed. Make sure when you check the prices are, you check with the actual site. So you go on Deribit and you take a look at it. See, if you click right here, it's going to go to Deribit. And you can do that. So it's pretty much a money hack. It takes, but as all money hacks, it takes a little bit of time. You need to understand what you're doing. So I started doing this just to try it out. It works well. I don't like to put money into Deribit. I don't like having to do the transaction every time. Put money, take money out. Put money, take money out. So this is why we're trying to do this all on chain. Of course, there's also ZZZ markets, which is another on chain options protocol. They look a little bit like Deribit. So if that's something that you can do as well, you can check it out as well. So these are all ways that you can arbitrage. And when you arbitrage, if you're doing that right, you can make good income, like 27%. That's cool. If you for having no risk, pretty much. There's no risk. This is the word that I'm trying to pass right here. No risks, because once you open and you close the position on the other side, there's no risk. Of course, you might get called on one side, but the win on the other side will cancel it out. See, Because let's say I sell this right here and it goes against me. Well, the other side, you're bought on the other side. So the other side is going to take care of the amount of money that you're going to lose, or the collateral that you're going to use on this side. So it is no risks taken, which is really good, really good. For 27%, there's people investing in protocols that pay way less, and they're taking tons of risks. We're working to make something actually useful, maybe a better tool. I'm not a programmer, but I know these guys that work at SyncQuote with me, they have huge ideas. Of course, we have time limitations, but we might be doing something like this as well. Lira right now has a lot of inflated prices. So if you compare the prices that they're offering right here, they're inflated. This is why the majority of the time you can see Lira on the sell side. So if you scroll down, you're going to see Lira on, okay, this is their bit. But the majority of the time, the inflated side is going to be on Lira. They're boosting, they're pumping their price for sellers. I think it is to attract more people because sellers want to collect a higher premium. So they're offering a higher premium this way. You can see on the other side, the majority of the time is either Premia or their bit. Premia, I don't like Premia that much, but their bit is okay. It's just a little bit hard to understand. So make sure to try this out. This is cool. Once you start to understand, once you start to do these arbitraging things, you're going to start to look for arbitraging opportunities everywhere, not only options related. You're going to like, for example, at one point I was arbitraging with perp.com, perpetual protocol, which I don't think it works for US users as well. I'm sorry, US users. And then doing the inverse on Uniswap before Uniswap v3. So I was on perp, long on perp, and short on Uniswap on assets because the APY was because the positions were going to cancel, and the APY that I was making was higher than 0. So that is a delta neutral strategy because you have no risks, but you have an APY that is higher than 0. So you're profiting from doing that. If it is 0, then there's no profit in opening a position here and closing it there. So this is what I was doing. I think this is everything that I had to say. Of course, feel free to add me here in Discord. I stay on Discord probably 10-15 hours a day. So if you have any questions on arbitraging, selling options, you can just pop up at the options tab on Discord. Options, they work the same for crypto, for stocks. There's only the only difference is that, as I showed you, you can use stable coins instead of the underlying asset. But how they work, how Greeks work, the mechanisms of an option, they work the same way. So I'm sure Dark Miner, the Decade Investor, they'll be able to help you. They have way more timing. They have way more time in the market than I do. I've been doing this for maybe 3 years with stocks, and less than a year with crypto options because we're just new with crypto options. But so we're always here to help you guys out. If you have any questions, feel free to reach out. I think this is going to be it. Of course, stay tuned. Keep on pushing me to release that course as fast as I can. Let me actually see if I can log in on Udemy right now. Udemy. Oh, there we go. Let me see. I already have all the content here. This is the curriculum that you're going to be able to study. It's going to be around 19, probably 18 or 20. I don't know how many exact lessons you're going to have here on this course, but it's going to be on Udemy. So this way you can leave a review if you like it, if you don't like it, if you hated it, you can do everything over there. So far I've uploaded all the way to this. I am working on editing these right here. These ones I still haven't uploaded because they haven't been reviewed. So there's no point of uploading if no one has saw it and gave me the thumbs up. But yeah, the work is in progress, and I hope it pays up. I hope some of you guys get to understand and get to make money, which is why we are here. We're here to make passive income. So if all this work that I'm doing, all this work that we are doing, we have a bunch of content creators, a bunch of mods right here. They're doing an amazing jobs reviewing projects for you guys. If that pays off, then we're happy. At least I am happy. I'm happy to see when people say they're making money, they are changing their lives. I've started changing my life with this kind of stuff, so I hope it can change your lives as well. Yeah, thank you for watching. Thank you for joining here with this live stream. I hope it was insightful. Thank you, Mort, for the kind words. I'll see you guys in the next one. Hey, peace out. Drink some water.